Hello and welcome to your weekly market insight, where we provide an overview of the top financial events and news over the past week. Bonds and stocks. It was another wild week for the bond market, with prominent investors Bill Ackman and Bill Gross making big calls. The 10-year Treasury yield jumped to 5%, while the 30-year Treasury yield rose to 5.15% in just 2 months. With the yield curve inverted since 2022, this signals a potential economic downturn. Analytics suggest the ballooning budget deficit is masking weakness in the economy. The S&P 500 retreated 2.53% for the week, sliding into correction territory with Friday's close more than 10% below its 52-week high. The Nasdaq Composite also entered correction mode. Megacap tech stocks drove the broader market lower, with the Magnificent Seven names like Meta, Nvidia, and Apple posting weekly losses between 2 and 4%. This club makes up 30% of the S&P 500's market cap, so their decline weighs heavily on the index. Amazon, on the other hand, closed the week with a 2% gain. This week, the utilities sector experienced a 1.1% increase, while the energy sector saw the biggest decline, with crude oil losing 3.5%. Looking ahead, all eyes are on the Federal Reserve's upcoming policy meeting and rate decision, which could provide further weekly market insight. Economy Weekly Insight. On the economic front, September PMI data showed that manufacturing output increased to 50 in October 2023 from 49.8 in September, beating the forecasted 49.5. Moreover, service sector activity picked up pace with firms reporting stronger demand conditions. GDP increased 2.6% in Q3, higher than expected but below Q2's pace. It is also the highest expansion since the last quarter of 2021, above market forecasts of 4.3%. This indicates the economy is slowing but still growing steadily. Next week, there will be some important reports about jobs that will give us an idea of how the economy is doing. The ADP jobs update, the JOLTS report, non-farm payrolls data, and the Challenger job cuts report are the ones to watch. The information from these reports will help us understand whether things are getting better or worse in terms of employment. Eurozone economic outlook. The Eurozone economy appears to have stagnated or worsened in Q3, with the largest economy Germany likely contracting slightly. While France and Germany reached a deal on nuclear power subsidies, a broader fiscal agreement still needs to be achieved. With the ECB seen as done tightening policy, CPI may slow in late 2023 but risks still seem skewed to the downside both economically and geopolitically. After the euro corrected higher in October, it stalled near $1.07, leaving it vulnerable to revisiting its 2022 low around $1.0450. Cryptocurrency. In the world of crypto, Bitcoin crossed $30,000 for the first time in months over the weekend. It continued climbing to hit $35,000 by Tuesday, as traders bet on the potential approval of the first spot Bitcoin ETF in the U.S. The optimism stems from asset managers accumulating Bitcoin in anticipation of ETF approvals and surging demand. About 20,000 BTC have left exchanges recently in large transactions over $10 million. Bitcoin investment products have also seen 4 straight weeks of net inflows totaling around $180 million. The excitement fueled Bitcoin futures open interest on the CME to reach $3.4 billion. Over $180 million in short positions were liquidated as prices rallied. With high expectations and heavy institutional investment, the environment resembles the tech stock market. A spot Bitcoin ETF could become the most technologically advanced tradable asset globally. That wraps up your weekly market insight. We'll be back next week with more analysis of top financial developments. Don't forget to subscribe to our channel and give this video a thumbs up if you found it valuable. Doing so lets you stay updated with our latest insights and strategies. Thank you for watching.